where did the problem start? Because you mentioned earlier that there was a time when, because I do know that also that there was a time when petroleum marketing stocks were the source of investors. They had a sizable chunk of the market. So at what point did it all go wrong? Did they just start, they started to fall, and it looks like they just haven't found their feet?
One, there are two ways I want us to look at it. In those years, in the 90s, the stocks that were actually referred to as blue chip were those in the petroleum marketing sector. Virtually all of them. The national oil of that time, now Corn Oil, Total, Texaco, now Chevron, AP, now FO. All of them were blue chip stocks. But things were going on very fine. But when we approached we entered into 2000, 2003, 2004, when the capitalization came, there is a shift of focus by investors from those traditional blue chip stocks to the banking sector.
Well, does that change the fact that these petroleum marketing stocks are still as profitable? Does that make them less profitable?
No, it doesn't. But there was a shift from them.
Just okay.
And after a while, we saw that the extent to which they were making their profitability level dipped relative to their top line, relative to what they hand over to investors by way of dividend at the end of the financial year. And definitely, since the banking sector now offered a better opportunity, so there was that mass shift from those traditional blue chip stocks to the banking sector stocks.
Okay, let's go into the numbers proper now. Let's start with Total. Second quarter ended June 30th for this year. Turnover came in at 109.8 billion. That was a growth of 25.5%. Profit before tax also climbed to 4.4 billion, 35.1%. Net profit, that's profit after tax, came in up 37.5% at 2.9 billion now. Now, as a stockbroker, looking at these numbers, what's the first thing that comes to your mind when you look at the turnover, you look at the net profit?
Well, for a stock like Total, I think to be fair to them, they've been very steady in their earnings. It's not one that goes up and comes down. At least there has been a steady growth.
There's been consistency, basically.
There's been consistency. Okay. And when you look at it, among the entire pack, it's been the only one that has maintained that status. You understand? But for what we are saying, 109 to 2.9, the earnings turnover ratio is not encouraging. It's not encouraging at all, because that's like when you look at it critically, that's like 3% of the turnover. Is not really encouraging. At least what may be more acceptable may be a figure in the vicinity of 8-10%. So if they are declaring a profit of about 8 billion, 10 billion now, is not out of place. Is not out of place at all.
From
so definitely. If an investor look at it critically, then it's not worth putting so much money into.
But I do know that you probably have investors, your own your clients who hold on to Total stock. So, what are the sentiments, or what would you tell them if they come to you for advice and say, is it a hold, a buy, do I sell, do I hold on to Total?
One of the major reasons why a stock like this will be held on to is for the reason that it stabilizes a portfolio. It's not one that we go up astronomically today and drop significantly tomorrow. There is a steady growth and there is a measure of stability.
So that would be the only reason?
It's good enough to hold on to, and also for the earnings.
And do you know also that the earnings per share also grew 37.5%, now at 861, I guess not too bad. So for you, Total would definitely be a hold.
Yeah,
you tell investors to hold on to Total. But let's move over to Mobil. Let's take a look at Mobil's second quarter earnings. Turnover, funny enough, many of them did have a growth in their turnover, but when coming down, they had a turnover of 42.5 billion now. That was a growth of 46.1%. Profit before tax, however, dropped 31.7%, coming in at 3.6 billion, while profit after tax came in at just 954 million, lower than what we saw before. Or actually higher, 411. So for a stock like Mobil, could you describe it the way you just described Total? Consistency, perhaps in not just dividend payouts, consistency in revenue growth, turnover growth, net income growth.
Yeah, I believe Mobil will come second using those parameters. But sometimes too, you get a lot of disappointment from them in terms of dividend payout. But basically, I will suggest that one to maybe a partial hold. What I mean,
partial hold.
Partial, for you to keep your eyes open, so that you could, if there are opportunities in other sector, in other stocks, you could actually let go and move on to those ones. But for Total, is a good hold.
But Mobil is not, in your, as a stockbroker, if you're talking to your clients, it's not exactly a good hold. Just hold on to it and get set or get ready, be prepared to sell.
Exactly.
If you find.
Yeah.
Well, that's interesting. Well, let's move over to another stock. Let's move over now to, I believe we have Cornell here. Let's take a look. Before we go to Cornell, let's look at some of them that are actually not even within the 5, because we do actually see volume moving on the stocks. Let's take a look at Japan Oil. Second quarter ended 30th of June. Turnover climbed 17.3% to a little over 6 billion. Profit after tax also up 22.9% at 1.2 billion naira. So, is that a good performance in your own opinion for Japan Oil?
Yeah, for
it's not as big. It's not like it's not in the league of the Mobils. Or
it is a good performance, but it has a but. The but there is that the number of shares in issue is excessively too high.
Oh, really?
Yeah, compared to what we have in terms of Mobil, in terms of Total. In fact, that's one of the things that plays out well for those two stocks. The number of shares in issue is significantly low, even with respect to other stocks in the entire market. But for Japan, the number of shares in issue is high, and that definitely will affect the earnings per share.
So what does that mean? Just break it down for us. If we have one stock that it has a high price and has a few stocks in circulation, we have another. So
fine. For a Total, having number of shares in issue that I would describe as scanty. For such a stock, when they declare earnings, what comes to an individual shareholder is high. Yeah. And also the widespread nature of the stocks is not much. It's not evenly distributed. So it's in the hands of a few. So that one will enhance a price stability over time. But when you look at a stock that has so many shares in issue, and when they declare their earnings, even if that earning is fantastic, what comes out to an individual is quite not appreciable. It's the same thing that happens in the case of Guinness and Nigerian breweries. The profitability of Nigerian breweries is much higher than that of Guinness. But because of the fewer number of shares that Guinness has, okay. So the investors go home with a higher dividend
than Nigerian.